Hi everyone, my name is Bassem and welcome back to the channel. This video will be about the Canadian real estate market. I've been getting an insane amount of questions from potential and current homeowners about the illness, the recession, and the potential effects on the Canadian real estate market. Keep in mind, real estate is a lagging indicator. This means it could take months to see the effects of a change in any economic conditions. So you can't go to an open house. If you're looking for a house, you can't just go up to a seller and say, hey, it's a recession, I want $200,000 off. It doesn't work like that. Things take time. So what will happen with the Canadian real estate market? To be honest, I don't know and nobody else knows. I think it's very deceiving for realtors to continuously advertise and tell everyone, we'll be fine, keep buying and selling. Obviously, it's their business. So instead of me just giving my opinion on the housing market just so I can sell more houses myself, I'll go through the factors and reasons of the Canadian real estate market. You know what? I'll stick to my expertise, which is the Toronto real estate market and the Greater Toronto area, of how we got to this situation. Has the recession or illness affected it yet, or will it affect it? If you're new here, please remember to like the video and subscribe to the channel. You can also check out other videos of mine about stocks, investing, real estate, and finance. Everyone knows, every Canadian knows the Toronto real estate market or the Greater Toronto area. The houses are expensive, condos are expensive. If we look back at how we got to this scenario, we'll have a clearer idea of what's going to happen in the future. First point, it's a basic economic concept of supply and demand. The story over the past 10 years, hell, maybe even longer, has been there is a housing shortage in Toronto. The GTA is growing faster than new houses are being built. In 2019, GTA has had a record 125,000 immigrants move to the area. If we assume these are all families, let's say there are 3 members per family, this means we'll need 40,000 housing units. Now let's compare that to the 30,500 new units that were built in 2019. We all of a sudden have a 10,000 housing unit shortage. Keep in mind, this doesn't even take into account organic growth of the city. This means the children of families who are getting older, getting jobs, and wanting to move out. This 10,000 unit housing shortage becomes even more and even higher. I don't have the numbers for the organic growth, so I won't even try to quantify, but this is just to illustrate my point further. So the recession happening, the illness going around, this doesn't fix the actual need for more houses. The supply isn't meeting the demand. This is one factor for the high price of every unit, and let's call it a positive for the real estate sector going forward. Next point, we've had low interest rates for years, and they keep getting lower. There was a stress test implemented 2 years ago to see how if people would be able to afford houses if rates went up. But what was the point if 2 years later rates are going down? Anyway, it didn't help anyone, and also that's besides my current point. With mortgage rates decreasing, people who were previously, let's say, priced out of the market because the monthly payments were too high are now able to afford houses, so they're entering the market. And then real estate investors who weren't able to afford previously are now also entering the market to buy an investment property. This means more buyers, more competition, more demand. More demand means an increase in prices. In a recession, interest rates don't go up. They usually go down. The government decreases interest rates to help boost spending to try to spur the economy. So this factor isn't going anywhere anytime soon, so that's another positive for the real estate sector. Third point, rental vacancies are at an all-time low. In the GTA, the vacant units that are up for lease, it's less than 1% of the entire market. So landlords and investors like myself, we're having the time of our lives. The lack of purpose-built rentals is the reason for this. Nobody, like the government or companies, aren't building buildings or houses just for rents only. So this is the primary market. That means the big increase has been in the secondary market, which owners, like I'll buy a condo or a house and I'll put renters in it. This has made us very happy and very wealthy. This is another positive sign for the Canadian housing market. It's not just new immigrants and families vying for property, it's investors as well. And remember that recessions, for the most part, don't affect the rich. It's mostly the poor and the middle class that get hit the hardest. So millionaires are still gonna millionaire. Cash is king and they have plenty of it. Point number 4. In a recession, unfortunately, lots of people will lose their jobs. When hundreds of people lose their jobs, they can't afford their mortgage payments, the banks will foreclose on their properties and try to sell them, or the people will start panic selling. You'll see hundreds, if not thousands of units suddenly come on the market, driving down prices. I hope this doesn't happen. I hope nobody wants this to happen except internet trolls, maybe. This could be the reality of the Canadian housing market. But what's stopping this from happening is that all the banks have agreed to work with homeowners who have lost their jobs to help defer their mortgage payments for up to 6 months. This is huge. This could mean the difference of keeping your house versus losing your house. This 6-month deferral could be the one reason families get to keep their homes. It reduces the number of defaults, reduces the number of foreclosures and panic sellers. This is yet another positive sign for the Canadian housing market. Again, a recession normally lasts longer than 6 months, but hopefully families have some emergency fund or rainy day fund that can help them outlast this recession. But if it lasts longer than 6 months and they can't afford, I guess there's nothing we could do. Last point, I promise. A few years ago, the Canadian government put a 15% tax on foreign buyers from parking their cash in our condos and houses. Canada has had a big problem of wealthy families buying tens, if not hundreds of units. This tax kind of helps, but if you think about it, with the rate that properties have been increasing, if you just held on for 1 year, you could probably make this 15% back. And anything after that is pure profit. Anyways, that's besides the point. My point is, as the Bank of Canada has been decreasing interest rates, this makes the Canadian dollar less valuable in comparison to other currencies. The Canadian dollar gets weaker. You can see evidence of this by taking a look at foreign exchange charts in the past month alone. Over the past month, the Canadian dollar has lost 9% value in comparison to the US dollar, the Hong Kong dollar, and the Chinese yuan. I hope I'm pronouncing that correctly. So if you thought Canada had a lot of foreign buyers before, they suddenly have, within 1 month alone, they have 9% more purchasing power. So they'll be definitely scooping up more real estate. That's another positive sign, I guess, if you want to consider it a positive, for the Canadian real estate market. To conclude, I feel like this has been a giant essay. I feel the Canadian housing market and the GTA will not experience declines in the housing market. Declines in prices, I feel like prices will increase, hopefully not at the same 10% pace that we've been seeing in the past. But I'd love to hear anyone's thoughts, arguing any points I've made or any points to the contrary. That's all for today. Please remember to like the video, subscribe to the channel, and stay tuned for future videos about the recession, the stocks, the effects of this illness on the stock market, personal finance, and budgeting. Also, if you're new to the channel, check out my old videos on TFSA, RRSP, beginning advice for investors, and how to get multiple streams of income. Thanks, guys.